What's going on, guys? In this video we're going to make a very quick explanation and educational video showing you guys how to draw up your supply and demand zones so you guys can be a lot more consistent as well as profitable, whether you're trading stocks, options, futures, forex, whatever. What we're going to start looking at here is the SPY. A lot of you guys like to trade the SPY, so we're just going to kind of use this as just a general overview for this video. Now we're going to start off with the daily time frame, and we're also going to start off with a very blank chart. I am using Thinkorswim. So that's going to be the platform that we're going to be working on here today. So what I'm going to do is start off by looking at the daily chart, and with screen time, with experience, your eyes are going to get more trained to kind of picking up on some of these supply and demand levels without having to spend too much time. And we're probably going to get through kind of setting up this chart for tomorrow in less than 2 to 3 minutes. So what we're going to start to look at is here's what is the absolute high, right? What is the top here? Where did we have this rejection? Where did we have a lot of resistance? You can see the recent high here, 418.41, going back to February, is going to be our absolute high. So this is going to be our absolute top supply zone here. You can see we've got a ton of area in this region here that was acting as a major area of resistance. So we definitely know that we're going to need to clean out 418.54. You can see today's candlestick starting to approach that level, sitting at around 415.70. What I'm then going to do is draw out this bottom line here. You can see going back to January as well as March the 13th, we had a double bottom here down in this area. This is going to be our bottom demand zone. We know that price action, once it started to get down into this area here, acted as very firm support for those bulls to kind of step in and start buying up the SPY. That price is sitting at around 379.36. You may be thinking, well, this is a big range here. I'm not going to really kind of wait for 379. I'm not going to wait for 418. We just need to kind of add these levels so we know where our macro supply and demand levels are. We're going to start working our way down. We're going to then go down into the 4-hour time frame. We're going to kind of zoom in here just a little bit. I don't really want to see too much data on the 4-hour time frame, maybe just about a month's worth of data. So if we kind of look at where we stand here on the 417, let's kind of just go back to this last recent low in this area. Okay, so if we kind of go into this area here, you can see we had some rejection here. And when I always put it at the top wick, why? Because sometimes if we kind of draw it right here exactly at this, you know, where all of these body candles started to close, sometimes we'll break that price action, you get long, and then we pull back, right? So let's go ahead and use these the top wicks. That price is sitting at 407.50. Now you can see that this top wick here then later on became a firm area of support, right? So previous area of resistance is now been acting as a new area of support. So if we kind of look at the bodies on these candles here back in March, that was acting as resistance. If we were to actually draw a zone, right, you can see that we've come down into this zone multiple times, and each time we've come into this zone we have bounced. So what I'm going to do is now set this demand zone here at the bottom wicks. Now if we do start to break below 405.79 and we start to close below it, right, if we get a 4-hour close below it, then that's when we're going to look for a confirmation of that candle that closed below it to then take that position short. If we do get back into this zone here, this is definitely a buy zone, because as you can see, we've bounced off it multiple times, 1, 2, 3, 4, and back here acted as resistance. So as long as this zone between 405 and 407, 408 holds, this would be your demand zone where you're going to want to look to bounce in this area to take it back up to the upside. Being that we do have a resistance level at around 418.54, and in this region here, in this zone, we definitely, if we are taking this bounce spot here, want to take our profits into this supply zone. Okay, so a lot of times newer traders will get into trades. Let's say, for example, the SPY continues to come down. Newer traders will take this bounce spot and think that it's the end of the trade and that we're just going to magically make new highs. Sometimes we do and sometimes we don't. We always want to make sure that if we do take this bounce, we want to be taking profits along the way. Make sure to hold a runner in case we do attempt to test this 418. And if we do break the 418, keep a runner and move your stop loss up to break even or put it in profit, so that way it's a break even and free trade. So let's just continue on with drawing some of our supply and demand zones. What we're then going to do is now go into the 1 hour time frame, and now I'm going to pull up just about 2 weeks worth of data here, and I really kind of want to see, you're going to see these previous demand zones start to look a lot more clear. We came down on this day, tagged it, bounced, consolidated, came back down, tagged it, bounced, came back down, tagged it, bounced. You can see that this has been acting as a very firm level of support. So if, for example, this price action does start to come down, okay, there's something in the market that causes the market to, sell off here, and we do start to close below the 405, look for this area here that was acting as previous support to now be new resistance. And what we would want to do in this case is, as soon as we lose this 405.79, wait for the price action to break down, allow it to rebounce and retest this area to see, is this going to be new resistance, and then we would want to take the short on the reattempt of that loss. That's how we're going to do that there. So just on our 1 hour time frame, what we're going to do is put a little bit more supply and demand zones on our chart. So you can see this top wick here acted as an area of resistance. We were rejected, came back down to our previous demand zones. You can see here, just going back 2 days ago, once we broke above this area, we tried to hold it, but once we started to close below, came back down into this zone. This zone between 407 and around 412 has been extremely choppy. It's definitely a zone and an area that I would kind of want to stay away from. So just kind of looking at these two bottom wicks here, going back to 2 Fridays ago, what I want to do is draw another demand zone down here. So the chart starts to look a little bit more clean, and I'm going to show you how we're actually going to use this to day trade, right? So now we've got different levels, we've got different supply and demand zones here. What we're looking at as day traders is we're looking for these levels to break or hold, and then look for them to get confirmation. That way we can go long or short. So realistically, our new, okay, and on today's pre-market high, I'm going to put another supply zone here at 416.10. What we would be looking for here, we're going to either switch to the 15-minute to do our day trading, or we're going to use something like the 5-minute. If you don't have, if you're not too for example, the 15-minute chart is going to give yourself a bigger risk just due to the candles are 15 minutes versus 5, so those candles are going to move a lot more. But if you kind of look at that demand zone that we drew from the 4 and 1 hour time frame, we came down, kind of tagged it perfectly here at the 412. If we do lose 412.78 on a 15-minute time frame, for example, if we do start to come down and we close below, what you're going to want to see is a close below and either a bounce and a rejection here, or what you're going to want to see is a confirmation of that close below 412.78. So this candle would close here on a 15-minute time frame, then we would look for it to either consolidate, bounce, or confirm the lows. And as soon as we confirm those lows, this is where we're going to want to take our short position, and we have a price target in mind between 410 and around 411. So you're looking at about $1 to $2 worth of room in that potential day trade. Now this video is very, very quick. It's very, very brief. It's very, very basic. If you guys would like more information and learning how to kind of expand your tool belt and really understand supply and demand zones, make sure to join my Discord. That link is down in the description box below. I offer coaching, mentorship, mindset help. I also offer a big strategy guide kind of course on showing you guys how I use my supply and demand zones on my big chart. If you guys would like all that information, make sure to visit evolutiontraders.com. I hope this video found you guys a little bit more clarity in how to actually draw and set up your supply and demand zones and how you would actually use them on a day in and day out basis. Until next time, I'll see you guys on the next video.